we've done a study about what will it really take to project and understand the future of the cannabis industry. We are very excited to see more research and analytics firms enter the space. The more of us out there, the more transparency and visibility we'll have into this very unique space. But most importantly, I wanted to bring attention to the 5 dimensions that are needed to be understood in this space, including federal legislation, state legislation, the operators themselves, what we call the industry, the ancillary services, which is a space that's becoming more and more challenging to map out, given that now ancillary services are not only unique to the space, but also many ancillary services from all other mature markets are coming in. And last but not least, the consumers. These are the 5 dimensions that New Frontier Data and its partner endeavor to bring new visibility into.
All right, thank you very much, Giada. Next, we will hear from Scott Greifer, the president of Viridian Capital Advisors. Scott.
Gretchen, thank you. Thank you, everybody on the call today. I want to thank Giada and John and Gretchen, who are our partners here. I think New Frontier was one of the first companies we ever met in the space, and we've kind of watched each other grow and advance, and now we're back in partnership, and so it's been a really great friendship and partnership. We launched Viridian Capital Advisors over 3.5 years ago as a advisory and investment banking platform in the cannabis industry. Having done and worked with emerging growth companies and emerging growth verticals for 30 years, I wanted to bring a very institutional, data-driven practice to advising both companies in their growth plans, in their capital raising, in their M&A path, as well as advising investors that are looking for the right verticals to invest in, the right management teams to back, and structuring the right deals and valuations for them to come into the industry. We bring a tremendous amount of experience, having raised hundreds of millions of dollars and done dozens of M&A transactions for early stage companies. We really have developed a passion and expertise for backing what we believe are the best managed companies in the cannabis industry. I think and hope many of you have seen some of our data services, particularly the Viridian Cannabis Deal Tracker, where we have tracked over $3.5 billion of capital markets activity in the space. We'll be talking a lot about our trends and intelligence that we've learned as to where the money is coming from in this space, who are the investors, where the money is going to. Is it going to ag tech or biotech or cultivation? And the variance in valuations and deal terms for each of the sectors of the industry. This is not a homogeneous sector. It is made up of 13 very distinct vertical markets that each have their own risks and opportunities, different positioning in the markets. Some are beneficiaries of regulatory change, and some companies and vertical markets will get squished and go out of business because of their inability to deal with regulatory change. So we are a traditional investment bank. We raise capital for clients, debt and equity, public and private. We have a very active M&A practice, as many of you have seen or will see. This is a rapidly consolidating industry, and it's an opportunity for investors and business owners to not only grow organically, but to acquire growth. We act as advisors to our companies before we ever go out to raise a dollar. We will help to build a real board, so there's real governance. We'll help to refine forecasting and budgeting so that there's a real process in place in developing models. We try to professionalize our organizations. So we're fortunate and thrilled to have a long tenure in the space, and happy to participate on today's call.
Much, Scott. That brings us to John Kagia, our Executive Vice President of Industry Analytics and the main author of today's report. John.
Good afternoon, everyone, and thank you very much for being here. And thank you again to Scott Greifer for the tremendous partnership that has brought our two organizations together to share our insights on the growth and evolution of this industry. My name is John Kagia. I'm the EVP of Industry Analytics with New Frontier. And in that role, I lead the team that has really been advancing the research to understand the growth trends opportunities and risks of the legal cannabis industry over the past 3 years. My background is in market research and industry analysis, and I've worked in a range of different sectors. But I've really never worked in a sector that has grown at the explosive pace that cannabis is growing at, nor one which has presented the sort of wealth-generating opportunities that we see in legal cannabis. So in that context, we're particularly excited for this partnership with Viridian, for the insights that this report brings that are really new in terms of where the money is going and where investors are seeing the opportunities. And we look forward to a rich discussion and a rich question and answer session this afternoon.
All right, thank you so much, John. Now we are going to jump into the meat of our presentation today, and John is going to start us off. John.
To contextualize why cannabis is growing as quickly as it is, and to understand the trajectory of this opportunity, it's really important to understand and answer the question of why cannabis and why now. So first, support for cannabis legalization is the highest it's ever been and has been growing explosively. According to the General Social Survey, which is considered the gold standard in public opinion research, support for full national legalization stands at 57%, and that is up 10 percentage points in just 4 years, and it's up 20 percentage points in the past 20 years. What that tells us is this is an issue that is gaining momentum, that is where support is accelerating, and it also underscores the question that we often get, which is this a flash in the pan? Is this going to go away? And based on the way public opinion on this issue is evolving, we believe it is going to be virtually impossible to put this genie back in the bottle. Second, beyond the broad support for public legalization, it's really important to understand some of the underpinning drivers that are leading to this shift in opinion. So earlier this year, New Frontier did a nationally representative cannabis attitude survey in which we polled a broad spectrum of representative Americans to understand how they felt not just about legalization overall, but around federal policy, around the potential benefits and harms of cannabis, and how consumption was evolving in the markets where it was legal. And a few things really stood out. First is that 63% believe that Americans should, that the federal government should fully legalize cannabis. And notably, only 13% think that the U.S. government's war on drugs has been effective at reducing cannabis use. Clearly, Americans no longer believe in the quote-unquote, this is your brain on drugs argument for preventing cannabis use. But there was also extraordinarily high support for medical cannabis use. 86% view that cannabis has valid medical uses, and only 28% think that cannabis is a dangerous drug. And notably, only 13% think that people who use cannabis should be arrested. And that 13% is really important to understand, because it means that even amongst people who may not necessarily support legalization, there's a very widely held view now that prohibition enforcement, arresting and throwing people in jail, has fallen out of favor with the public. And that has been part of the catalyst of the very strong shifts we're seeing at the state market. And one of the results of that is that support for legalization and consequently expansion of state laws where cannabis is legal in some way, shape, or form has accelerated dramatically. Currently, 96% of Americans now live in a state where some form of cannabis is legal, whether that is the non-psychoactive CBD products, medical-only use, or adult use. With the addition of West Virginia a couple of months ago, or last month, 64% now live in medical use states. And with the very significant expansion that we saw last November with the addition of California, Nevada, Massachusetts, and Maine as adult use markets, 21%, fully 1/5 of the American population now live in states where full adult use is legal. So we're talking about 68 million Americans now living in states where adult use is legal, 205 living in states, 205 million living in states where medical use is legal, and 307 now living in states where some type of law is legal. When we think about the impact of this in terms of whether federal cannabis enforcement might increase, we have to realize there's going to be a very significant number of Americans who would be impacted, and that will surely inform federal policy. What is the implication of this? One is that the legal cannabis industry is growing explosively. Based on New Frontier's modeling of medical and adult use states, by our estimates, in 2017, legal medical sales and legal adult use sales, and by that we mean just sales to cannabis consumers who either registered patients or adults in adult use markets. In 2017, legal sales will top $8 billion, and by 2020, that will double to $16 billion. By 2025, that will have risen to over $24 billion, and that's just in the states where it is currently legal. This is enormous growth, and this is explosive growth. And it is in that context that you're seeing so many investors now paying such intense attention to this industry, because these types of growth projections are rarely seen in most developed modern industries. So with that, I'll turn it over to Scott, who will drill into some of the key developments and investment trends we're seeing in legal cannabis. Scott?
Thank you, John. John, all I have to do is develop a British accent so I can sound as wise as you do. So we'll have to work on that, please. So let me flip to my page. So the first thing we did when we started Viridian was to take a very traditional Wall Street research approach to ripping the industry into its core component parts. And we came up with 13 business categories, really product, services, and technology categories that we think comprise the business landscape in cannabis. These are those 13. And what struck me as we started to dive in here was that you have represented in cannabis some of the largest asset classes in the world: real estate and biotech and ag tech and software are probably in the portfolio of every pension fund, university endowment fund, or personal 401k in the world. And those investment opportunities are resident in the cannabis market. Quite interesting. This is not as far into the investment community as some people might think. Can we go to the next slide, please? The first data service we launched was the Viridian Cannabis Stock Index. We are not in the business of recommending stocks. We are in the business of gathering market intelligence about how companies in the industry are being valued, how they are raising capital, structure, type, term, and who the investors are. We put certain filters. There's over 300 public companies in the industry today in North America in cannabis, if you would believe that. Many of them shouldn't be public, let alone be companies. So we put in some pretty standard filters to try to get to what we thought were the better position companies. Those turned out to be about 50. And we had a very, very nice run in 2016. We were up 230%, very strong into the first quarter of 17. And then the bloom started to come off the rose a bit, as you can see in this performance. I don't think it's so much due to Sean Spicer's comments, which clearly represented a little bit of the top. What I think it is that coming off of the election last November, not the presidential election, but the state elections where 7 of 8 states successfully passed legalization, that drove an enormous increase in the total available market for cannabis companies. California legalized recreationally. Massachusetts legalized recreationally. So the investors started to see a much larger total available market. we haven't had any of those types of drivers for growth since then. And that, in combination with the extreme valuations of some of these public companies, we've started to see a sell-off. Next slide, please. So there's a lot of data on this slide. I'm breaking the cardinal rule of PowerPoints, but you could see the performance going back to 2013, not only of our index relative to the major indices, the Dow, the S&P, NASDAQ, the Russell 2000, but how each of the 13 verticals performed. And we also wrapped up these 13 verticals into two main buckets: those companies that touch the plant and those companies that are on the ancillary side of the business. And I'll just speak to that on this slide in the interest of time. It's quite interesting to see that for a long time, it was thought that you could not take a company public that was touching the plant, either growing or selling or doing biotech, because those companies were in fact truly violating federal law in aiding and abetting in the production and sale of a federally illegal product. And yet, those companies that are public that touch the plant have consistently outperformed those companies that are in the ancillary, non-touching the plant side of the industry. We can, in a different time, go into why that is, but it really bucked the trend. And what I think the common thought was that touching the plant was the riskier side of the investment landscape. In fact, that's where the highest returns have been shown. Next slide, please. Our second data service that we started compiling over 3 years ago is called the Viridian Cannabis Deal Tracker. Here we track all of the capital markets activity that we can get our hands on in terms of investment capital that's coming into the industry, in addition to M&A strategic acquisition as the industry starts to consolidate. This chart only shows the investment capital. We built this database because as we were looking to raise capital for companies and represent investors, there was no real means on which to value a grower versus a lab testing company. Nobody had built a comparable company database, so we decided to build it on our own. We've now tracked over $3.5 billion of invested capital that's coming into the industry. We allocate it to one of the 13 verticals, obviously down to an individual company. So we have very valuable intelligence as to how a grow in Colorado is valued versus a dispensary in Oregon or California. So when we're representing companies or investors, we don't stick our finger in the air to try to come up with valuation terms. We look to our database and our deal tracker to yield that for us. A couple of interesting things on this slide. You'll see in August of 16, there was a step up and almost a launching pad for an acceleration in investment coming into the industry. That long pink bar you see in August of 16, that was a $260 million capital raise by GW Pharmaceuticals. But outside of that, you'll see in August of 16 through the beginning of this year, there was an acceleration of capital coming in. We believe that was really on the back of the successful elections, not the presidential election, but the 8 states that had legalization on the ballot, 7 of which passed. Investors were positioning themselves ahead of that very disruptive event and obviously taking advantage of the acceleration in new companies coming in after that event. So, industries and verticals move on tipping points. And the tipping point in the cannabis industry, as far as capital and as far as the amount of capital coming in, was the November elections in the U.S. last year, which at the highest level brought California in recreational legalization and brought Massachusetts in recreational legalization along with Florida. So now we have the beginnings of an actual East Coast market to go with a market that is more rapidly developing on the West Coast. Next slide, please. So where is the money going? Well, you can see here where the money's going. There have been 2 sectors that have clearly developed market leadership and outperformed in attracting capital. It's biotech pharma and it's cultivation and retail. Biotech pharma quite clearly is maybe the highest value of everybody's efforts in this space to really create medicine, not anecdotally known, but through clinical trials and double-blind studies and FDA oversight. So there's been a tremendous amount of attraction of capital into the biotech market. Cultivation and retail is interesting because at the core of both of those, particularly cultivation, is real estate. And as grows get larger, and as demand increases in states, not only states first implementing medicinal programs, but then moving on to recreational, which pulls in a lot more consumers, the requirement for larger lands, larger grows, larger greenhouses, larger warehouses where you can grow indoor increases. And in combination with the fact that there are very strict zoning requirements for licensed cannabis operations, you have a tremendous amount of money coming into the growing side, because ultimately it is about economies of scale, it is about lower cost production, and it is about larger grows. And this is where the money has been going to. Two other points that I think are important to point out. 2-3 years ago, almost every investment in cannabis companies, public or private, was in the form of debt, straight debt or convertible debt. Investors did not want to be on the equity side of the balance sheet taking on that risk. They wanted to be a lender with all of the security that provides the lender to any company. A year and a half ago, that began to change, and today, most investments in the industry are equity or equity linked. So what does that tell you? It tells you that investors are feeling more comfortable and are becoming more risk tolerant in looking for higher upside, higher rates of return by being a shareholder versus a lender. There's a lot of other information underneath that, but I think that's clearly an important trend here, is that investors are willing to be on the equity side of the balance sheet, chasing those higher returns, not laying debt on top of these cannabis companies. And the other important point is the size of the individual tranches is increasing materially. 3 years ago, the average size of an investment into a cannabis company was about $800,000. Last year, that number was about $8 million. So we've had a 10x increase into the tranche size. That tells you that there's bigger investors coming in. That tells you that there are smarter investors coming in. And that tells you that there are bigger bets being placed. Again, the level of risk tolerance is increasing. Next slide, please. This takes the evaluation of where the capital is going into 2017. You'll notice that not much has changed from last year. The two leading sectors continue to be biotech, pharma, and cultivation and retail. Next slide, please. We also track strategic activity in the space, principally mergers and acquisitions. And there's a lot of very interesting and important trends and intelligence that come out from this database. Most importantly, the pace of consolidation in this industry is rapidly increasing. This is not unusual for a new vertical market that is sort of in its 5th or 6th year. I know that might sound strange to people, but we really believe that the business of cannabis and the capital markets of cannabis started when Colorado and Washington State were the first to implement legalized adult use, because it took it from a very niche medical market to kind of everybody that consumes cannabis. That opened up the market for businesses to start, for the requirements for capital, and for capital to come in. 5 years into the evolution of the internet of the 90s, of Homeland Security after 9/11, of social media over the last 5 years, you see a natural aggregation process begin, typically because there are too many providers in the market providing the same thing. Price competition begins, and access to capital begins to focus. And the weaker performing companies either go out of business or get acquired. And that's what we're seeing here. What we're not seeing are the big strategic acquirers in the market. There was a big concern when we started Viridian and started to meet the people that have been in this industry for years, growing, advocating that big pharma, big tobacco, big alcohol, big industry would come in and dominate and control. And in fact, we've seen none of that. And I literally mean none of that. There hasn't been an acquisition by Philip Morris or a big alcohol company or Monsanto or Genentech on the biotech side. None. The consolidation is all within the industry itself. Companies that are looking for scale, not only through organic growth, but through acquired growth. And we're seeing that within the U.S. by operators across states, and we're seeing an increasing pace of Canadian companies starting to come down to the U.S. and buying footprints and representation in businesses in the U.S. because their balance sheets are so flush with cash. So this isn't entrepreneurs cashing out to the big strategic acquirer. These are strategic initiatives where companies are looking to expand product lines, acquire IP, develop regional presence in new markets, expand brands across state. This is ultimately the industry chasing inorganic growth. We haven't yet seen the emergence of the strategic acquirer. Next slide, please. So you start to see here where the M&A activity has been happening. Cultivation and retail is, and you'll see it into 2017, the most aggressive vertical market where acquisitions are being done. And this is very simply a case where, because interstate commerce is illegal in the U.S., you cannot, a licensed grower or dispensary owner in Colorado, the only way that they can expand to Oregon is to acquire a percentage ownership or acquire a management consulting agreement where they have control or investment in a grow in another state. So because interstate commerce creates a natural barrier to scale, that scale is being achieved through M&A. And then, of course, the next most aggressive acquirer in terms of a vertical are investments in M&A. So there are a number of both publicly traded and private, I'll call them holding company structures, where a management team is in place to make acquisitions across several different verticals. In a sense, it's a very much of a portfolio risk-adjusted way to acquire assets, not just focusing on lab testing or cultivation or biotech, but to acquire a portfolio of assets underneath the holding company structure. This is very traditionally done in a public structure in what's called BDCs, Business Development Corps, and ultimately you see these pieces starting to be spun off, and we'll start seeing that over the next couple of years. But there are companies that are being put together and established today that are in the M&A business as a core part of what they do. Next slide, please. I think this is my last slide, and I'll just make one point here. You see cultivation and retail continue to be an aggressive acquirer. You see investments in M&A continuing to be an aggressive acquirer. But infused products and extracts has now leapt to the second most active vertical in terms of acquisition. What is this? These are the brands. These are the companies that extract oil and create infused products, whether it's a drink, a chocolate bar, a sucking candy, whatever it is. As you will tell from the New Frontier data, and they were, I think, the first company to start reporting on this, there is a clear trend on the consumption side to less smoking of flower and more consuming either through vapes or through infused edibles. And again, because you cannot take these infused products and sell them across state lines, you have brands and brand owners starting to acquire other products in different states. It expands their product line, it expands their regional presence. So we're starting to see what we think is one of the most underdeveloped parts of the market, which is the brands, start to get very aggressive on the acquisition side. I think that's the end of my slides, and I'm going to turn it back to John.
Thank you very much for that, Scott, and brilliantly done. If you say you want to sound like me one day, I want to be as smart as you one day. I feel like I've just gotten a PhD in this market.
Well, thank you, John. You've got the accent, so it really doesn't matter. You've got me beat.
Well, you know, there's one thing that you said that I didn't want to key in on, particularly given that the country currently is amidst perhaps one of the most robust debates we've had on healthcare policy. And that's why cannabis investment specifically into biotech and pharma has been as robust as it has been. So earlier this year, beginning of 2017, the National Academies of Sciences, which is a U.S. government entity, put out a report that was the most comprehensive review of all of the peer-reviewed research on cannabis that has been done to date. And what they were trying to understand was, based on all of the research that's already out there, which conditions does cannabis appear to be effective for, which ones does it not appear to be effective for, and which areas is it currently inconclusive and is more research required. And there are a few areas that really jumped out. First was that there was conclusive evidence that cannabinoids were effective as antiemetics to prevent people from vomiting in the case of chemotherapy-induced nausea and vomiting. Second, there was substantial evidence that cannabis was effective for treating chronic pain and for helping patients dealing with the spasticity symptoms associated with MS, multiple sclerosis. And then third is that it was found to be effective at improving sleep outcomes, helping people sleep better without some of the hazards of dependency forming that you see in some of the over-the-counter and prescription-based sleep aids, particularly for people who are dealing with conditions related to fibromyalgia, chronic pain, MS, or sleep apnea. And these are just the areas where the evidence is quite strong that cannabis is an effective therapy. So keying in specifically on chronic pain, which is currently a condition that is of epidemic proportions in the U.S. Currently, 100 million Americans report suffering from a form of chronic pain. Over 2 million Americans are addicted to prescription painkillers. And if you look at just the top 3 opioids being prescribed on Medicare Part D, oxycontin, hydrocodone, and fentanyl are costing Medicare about $2 billion a year to manage pain. Why is this important? Well, because the science has found that in medical cannabis states, there's been an 11% reduction in the pharmaceutical doses being prescribed specifically for pain-related conditions. There's been a 25% reduction in accidental opioid overdose deaths. And New Frontier did some modeling to identify what the potential prescription drug savings would be if medical cannabis were made legal nationally. And by our estimate, just looking at the top 7 or so conditions for which cannabis is most often recommended, if cannabis were legal nationally by 2019, these savings for these prescription drugs would total $4.9 billion. That's an enormous reduction in patient spending and makes this issue of the role that cannabis will play in our national drug policy, our national healthcare policy, even more significant. So looking to the future and planning for the road ahead, Scott, what are some of the key considerations for investors?
So, thank you, John. You know, I view the cannabis industry as any other emerging vertical market. There are the obvious, focus on management, on governance, on the business model, on sustainability of margins and pricing, identifying the total available market, how much it costs to acquire a customer, all of that kind of traditional stuff. But I will tell you, I think there is probably a misunderstanding or misrepresentation about how difficult it is particularly for licensed operators, to run their company, because the rules of the game are in flux. You know, after states roll out programs, you'll see changes in consumption limits and tax rates and labeling requirements and packaging requirements. You have 280E, which causes punitive tax rates for these companies. You have the commercial banking issue. This is actually a very tricky, complex market for a CEO and a board to manage. And so our approach to the market is to back entrepreneurs that don't necessarily come from the marijuana industry. They come from other vertical markets, ideally technology verticals. They've had demonstrable track records of success in founding, scaling, funding, and exiting businesses. And it would be optimal if they had experience in highly regulated and dynamically changing regulated environments like cannabis. And that could be in finance, that could be in energy. Because this industry is not static. It is really, the rules of the game are being made up in real time at the state level. And so I think it actually takes a very nimble and experienced management team to know how to navigate the markets. And I'll just end up with the board. The development of a board of directors for cannabis companies, to me, is absolutely vital. And to have a board that has business experience and experience in financing and building cap tables for emerging growth companies, where there's independence on the board, there's a head of a compensation committee, there's a head of an audit committee, and I think most importantly, there are processes where the board has to approve budgets, the board has to approve forecasts, the board has to approve strategies. That's the role of the board. The CEO exists at the pleasure of the board. And part of what we do at Viridian, and oftentimes our first touch point with a company client, is to help build a real board. Because I think that brings a level of execution and operational integrity that is vital for investors. So I think I'll finish up with that on this slide.
Great point, Scott. Thank you. We can't talk about investing in cannabis without talking about some of the signals being put out by the administration around their thinking about cannabis. Most recently was a letter sent by Attorney General Jeff Sessions to Congress, asking them to no longer back the Roba-Kafar Amendment, which ostensibly prevents the DOJ from enforcing federal law in states where medical cannabis is legal. Now, we don't yet know how aggressive or what position ultimately the Department of Justice and more broadly the federal government will take toward medical cannabis. But it is certainly worth paying attention to because it is clear that the Trump administration is likely to adopt a pretty different position on cannabis than we have seen in the past 8 years under the Obama administration. However, it is also worth noting that the states have also already begun to indicate that they're not going to take federal enforcement lying down. The governor of Pennsylvania sent a very aggressive letter back to the Attorney General once the AG's letter was revealed, basically saying that if it is true that the federal government will try to somehow disrupt the medical program in Pennsylvania, Governor Wolf would be willing to adopt all steps necessary to protect the legal access of cannabis amongst residents in his state. So looking ahead, where are investors paying the most attention to? Which markets are they most interested in? Late last year, New Frontier Data did a survey of accredited cannabis investors to ask which states or international markets they were most interested in, and the results we found were quite interesting. Topping the list was Canada, and closely following that was California. And the interesting in Canada was because Canada has indicated that by the summer of 2018, it will become the first developed nation to legalize cannabis nationally. It will do so on a national basis, so you're not going to have the hodgepodge state-based model that you have in the U.S., which have been quite complicated for investors to navigate. The Canadian government appears to be formulating a fairly pragmatic regulatory process for the industry. Within the U.S., California, Colorado, Washington, Oregon, Nevada, and Arizona were really the markets where there's been a lot of investor interest. But as we start seeing the developments begin in places like Florida, Pennsylvania, and Ohio, and potential changes to the regulations in markets like New York, where the drumbeat of adult use legalization has begun, we very strongly expect that the capital flow will begin to drift from Western state markets very robustly into markets on the East Coast.
All right, thank you very much, Scott and John. That'll wrap up our presentation because we want to leave some more time for your Q&A. But first, before we get into the questions, let's take a look at the results from our poll question. We asked, in the next 12 months, how will your investment activity in the cannabis industry change compared to the past 12 months? Do you expect they will, and most of you are thinking 43%, increase significantly, followed in second by increase slightly at 40%. And many of you do not think they will decrease at all. Interesting if Scott and John agree with that. I'm guessing they probably do.
Well, that's certainly why you're on the call today.
Question, jump to John. How does hemp or CBD factor into growth opportunities?
Great question. And this is actually going to be my closing slide, so thank you for preempting that. It has been very interesting to me that over the past 3 weeks, I've probably had 6 or 7 conversations with some of the smartest people I know in cannabis, and all of them have made a very strong point about the interest in hemp and the scale of opportunity they see in that market. Even though hemp remains an area that is very immature relative to the medical and adult use markets in the U.S., and part of that is just an industrialization limitation. There's not a lot of production and processing capacity in the U.S. currently. The U.S. is the largest hemp consumer in the world, and most of that we import from either China or from Canada. And so the opportunities for hemp, not just for consumer products like edibles, oils, and cosmetics, but also in the applied materials, hemp plastics, hempcrete, hemp in as a supercapacitor that will power the next generation of long-life batteries. The opportunities are immense, and we barely scratch the surface of that growth. So we're very, very bullish on hemp in the long term, though it is going to take a little while for that industrial capacity to come to scale in the U.S.
All right, thank you, John. Scott, for you, do you have a list of the companies in your cannabis index?
Yes, we do. We do not publish them, but yeah, we do not publish them. But you know, if people want to call in, we can discuss something.
Okay, great. And Scott, the next one for you. It looks like some folks here were a little unclear on what you call straight debt, and can that be available for an industry that is federally illegal? Can you explain a little more?
Did you say trade debt, Gretchen?
Debt.
I'm sorry, is that a yes? Trade debt?
No, straight.
Oh, straight debt. Okay, sorry. So you're talking about just a loan from a bank? Is that the question, or can you make a loan to a cannabis company?
Yeah.
Okay. There's nothing illegal about it at all. In fact, as I said earlier, the majority of the funding, the financing we saw in our first year and a half of compiling the deal tracker was debt, either in the form of straight debt. It's a note, it carries a coupon, it has to be paid back after some term, or convertible debt, where that debt can be converted either at the option of the debt holder or the issuer into equity. So that is absolutely resident in the market today.
And if I could just add to that, because I think there's a misunderstanding about the role that banks are playing in this industry. While it is true that a majority of this industry, or a very significant proportion of this industry, is still dealing in cash, there are banks who are providing full merchant services to businesses in this sector, including retail businesses. There are dispensaries which accept credit cards. Some have found creative ways of doing that. There are banks which have been, or businesses which have been able to secure loans, generally from non-national, more state and locally based financial institutions. But just because it is federally illegal does not necessarily mean that banks are completely prohibited from being involved in the industry. It is rather that banks are requesting, particularly the big banks, the big multinational or international banks, are requesting greater protections from the federal government against any enforcement by the government if they chose to get involved. And some banks have decided that the opportunity is worth the risk and have been very successful in the space.
John, if I could add on to that, can I add on to that for a second? Because this issue of banking is so top of mind in the industry and for people looking at the industry. There are rules written for commercial banks to bank licensed cannabis operators. That's part of the Cole memo, and then FinCEN, the Financial Crimes Enforcement Network, also established a set of rules. So there is banking being done today, primarily just accepting cash into a bank account. There's not really lines of credit or checking accounts. There's certainly no mortgage finance in this industry yet. That's an all-cash business. We're starting to see the emergence of equipment lease financing, so there's some liquidity on the purchase and provision of hardware products. I think the issue for the banks is less the legality issue and more the burdensome compliance requirements that the government has put on banks that are banking licensed cannabis operations. These are extremely onerous and rigorous. They're extremely capital and people intensive. It's very expensive from a compliance perspective for banks to be in this industry. And because the industry was a little less than $7 billion in size last year, that's a big number for this industry. It's growing very quickly. It's still relatively small for the larger or national banks. So I think between that and the fact that the cost of compliance is excessive, I think that's really the impetus for the banks to stay out of the market, at least for this point in time.
All right, thank you, Scott. Our next question, I think, could go to both of you. Do you see big public companies going after this market once the federal prohibition is resolved, assuming that happens? John, do you want to start?
Yes.
You want to elaborate?
We spend a lot of time on the road and talking to people both inside the cannabis industry and outside of it. And what I'd say is that from all of the conversations we've been having, there's an enormous amount of capital waiting in the wings. And beyond the capital waiting in the wings, there's a lot of interest and thoughtful attention being paid to the industry. There are a lot of public companies, there are a lot of large private companies that are looking at cannabis and trying to figure out what their play should be, what their angle should be. The timing may not be right for them just yet, but they're doing their homework now. And we certainly expect that at the point that you see a shift in federal policy, some of that groundwork will start to materialize. For some companies, for some sectors, this may still be perceived to be either too taboo or too risky of a space to get involved in. But just based on a couple of conversations we had just last week with representatives in the alcohol industry, the interest is certainly there, even though the strategy of entry has not been finalized yet. Scott?
Well, I think the person who asked that question was wise, because it's the public nature of many of these larger potential acquirers that I think is the problem for them to come into this market with the current legal status. You know, as a public company, you're under SEC oversight and under enormous regulations from Graham-Dodd and other regulations that force you to disclose everything. And it's just a big risk for a public company, maybe because of their board, maybe because of their public status or their shareholders. It's just a big risk for them to come in and acquire at this point in time. I don't think there's any question that if and when Schedule 1 changes, either D or rescheduling, you are going to see a tsunami of big company action in the space because they are evaluating and due diligencing the space today. On the ground in states throughout the country, in Canada, in Israel, there is no grass growing under the feet of these potential strategic acquirers, so they will be ready to pounce when the legal environment allows them to.
Okay, looking towards the future at big upcoming catalysts or tipping points, what is most important for potential stock price growth? Do you see it being Canada, California's full legalization, GW Pharma garnering FDA approval, big pharma? What do you guys see as the next big catalyst for the industry for stock price growth? Scott, why don't you take that one?
Sure. You know, it would be magical if we had leadership in this country like Canada had with Prime Minister Trudeau, who ran on a platform of legalization. Understanding Canada already had a medicinally legal platform. It just wasn't allowed to materialize based on the government. They didn't want it. And of course, recreational has been passed and is going to come in next year. And you just have to look up in Canada to see how much money they're raising, the valuations of the public companies, the fact that there are institutional investors in these deals, to see what the U.S. could become if that ever happened down here. I'm not counting on that in the near future, and I don't believe that's a near-term catalyst. In fact, I think there's only one catalyst of growth in the U.S., one primary catalyst of growth in the U.S., and that's new states and moving forward on legalizing medicinally, and or existing states evolving from medicinal to recreational. That is the most linear and apparent visible driver of growth in this industry. In fact, New Frontier, which is tracking the sales growth at the state level and the national level, it's all coming from the reported sales in legal states. So I don't think there's another November 16 election cycle where we have 7 of 8 states passing legalization, including the largest state in the country. I'm not quite sure we have that kind of trigger. I think it's states rolling out medicinal and then rolling over to recreational. That's the driver.
Okay. We probably have time for about one last question. How does a small-time or first-time investor, say a regular middle-class person, start the process of investing with the goal of building a retirement fund? If you look at California, where should they be placing their hopes and dreams, Scott?
That's a lot of pressure, Gretchen. Well, I guess I'll answer it this way. It almost goes back to for those of us who are old enough to remember this name, Peter Lynch, who really put fidelity on the map in the 80s. You know, his common line was, invest in a company that makes products that you use. So if you walk into the supermarket and there's a lot of, Procter & Gamble dishwashing detergent flying off the shelves, maybe you should buy Procter & Gamble. I think I would recommend the same type of approach, in that if you're a real estate investor and you feel comfortable with understanding the risk and the upside in investing in land, then there are real estate opportunities for you in cannabis. If you're a biotech investor and you're looking for the upside of new drug development and you're an investor in existing pharmaceutical companies, there's a biotech opportunity for you to invest in cannabis. And the same holds true for ag tech and software and media and security. So I would say that there are asset classes here that most people, as I said before, own today, that have an investment opportunity in cannabis. And I would go with that asset class in cannabis. If you're a real estate investor, you can talk to us about real estate investment opportunities, whether it's in California or it's in Massachusetts. So kind of go with what you're familiar and comfortable with in terms of the asset and the type of investment structure, because that opportunity exists today in the cannabis marketplace.
All right. Thank you very much for joining us today. I'm sorry, but we are out of time. As a special offer to our attendees, you can receive 10% off of our report, Investing in the Cannabis Industry 2017, when you go to our link that is listed here and enter the promo code InvestorWebinar. Now, as mentioned before, and a number of your questions asked, a recording of this webinar will be sent out later this week to all of the attendees. For the most in-depth research, comprehensive insights into the cannabis industry, and to keep up with our research, please visit us at newfrontierdata.com and follow us on Facebook, LinkedIn, Twitter, at New Frontier Data. Have a great day, and thank you, Scott and Viridian, for joining us.
Thank you, guys.
Thank you, Scott.